All right, good afternoon, everybody. My name is Vanessa Huntsberger. I am with the Specialized Retirement Branch within Civilian Benefits Center. Today you are attending the Retirement Planning for Federal Employee Retirement System for Special Retirement Coverage Provision Employees. And we will go ahead and get started. Next slide. So today our agenda will consist of the following. We will let you know how to check if you are coded as SRC accurately, what transfer requirements look like, primary and secondary position descriptions, maximum entry age and mandatory retirement dates. We'll also cover creditable civilian and military service. We'll cover service deposits, retirement eligibility, disability retirement. Next slide. And we will also cover things such as your benefits with your FEHB, your FEDVIP, your FEGLI, your Federal Long-Term Care Insurance Program. We'll also review some things over TSP. We'll cover beneficiary forms, annuity computations, the Department of Navy retirement process, and then at the end, we'll just provide you some references and resources and also have an opportunity at the end for questions. So just so you're aware, before we get going, next slide, please. Before we get started, we have some folks in the chats who are going to be monitoring any questions coming in. So if you have questions due to this being a live event, please place them in the chats. We have two folks standing by ready to answer questions. If they are specific to you, I would ask that you call the benefits line or email the benefits line and let them know what you're looking, what information you need to confirm, and they would assign you a counselor that would be in touch with you. If you just have generic questions, that's fine. Throw them in the box and let us know what they are, and we'll definitely get to them. And at the very end, again, we'll open up for some additional questions in the chat. So. All right, so how to check if you are coded and covered under SRC. So on your SF50, you want to look at block 30. And if you're looking at your personnel action, you should have one of the following codes listed on this slide. So for firefighters and law enforcement, you should see M, MR, or MF. And for air traffic controller, you should see L, LR, or LF. And, we have on the slide here the difference. It just really depends on whether you're FERS, FERS Ray, or FERS Fray. That's the biggest difference. If you believe that you should have one of those codes on your 50 and you don't see it, please contact the benefits line and let them know you believe there is an error. Again, they will generate a call ticket and a counselor will be assigned to you, and they will do a record scrub essentially and let you know if in fact you are coded correctly or if there's a correction that needs to be made. Next slide. So anybody that has wants information on transfers, so just so you're aware, an employee will continue to be covered under SRC if, while you're covered under SRC, the employee moves directly from a primary to a secondary position without a break in service of more than 3 calendar days, and the employee has completed at least 3 years in a primary position and has been continuously employed in a secondary position since moving out of the primary position. So when it comes to transfers, the primary and secondary positions are key, the length of time that you have spent in that primary before transferring. So on occasion, we do receive call tickets where the employee is looking to potentially transfer to a secondary position, and they want confirmation, what that might look like for them, how that impacts their SRC coverage. So also, again, if you're looking at, position changes and you're concerned, don't hesitate to contact the benefits line. Again, a counselor can help kind of explain that based on your specific situation. Next slide. So what happens if an employee transfers from an SRC position to a non-SRC position? If the employee performed at least 20 years under an SRC position and meets the age requirement, the employee will receive an enhanced SRC annuity, whether or not you were in an SRC position on the day of retirement, okay? However, If you performed less than 20 years under an SRC position, you will not receive that enhanced annuity, and please be aware the excess contributions will not be refunded. So that sometimes is something that is confused where when the second bullet applies to you, some people have misconstrued and assumed that they would get the extra contributions refunded to them, but that is not the case. So just be mindful of that. Next slide. So primary positions, we talk a lot about the primary and secondary positions. With the primary positions, these are positions that have duties so rigorous that employment opportunities are to be limited through physical requirements, maximum entry age, and mandatory retirement dates. The primary position duties occupy a substantial portion of the working time and are assigned on a regular and recurring basis. Next slide. So with our secondary positions, keep in mind that only firefighters and law enforcement officers have secondary positions. And those are either supervisory in nature, where the primary duties are those of a first level supervisor of primary positions, or administrative, so executive, managerial, technical, semi-professional, or professional positions for which experience in a primary position or equivalent experience outside the federal government is a mandatory requirement. Next slide. So let's discuss the maximum entry age and mandatory retirement date. Most people that are already in SRC positions are aware of this. However, sometimes they're not. So just to kind of briefly touch on this, the maximum entry age for a firefighter in Leo essentially means that you must be age 37 or younger to come into a firefighter or Leo position. ATCs must be 36 or younger. So first hires or rehires that are over the maximum entry age must have a waiver prior to onboarding. So there have been times where, somebody they may be 38 years old as a firefighter or Leo, but as long as they have a waiver that establishes that they have the authority to come in beyond that maximum entry age, then it can be accepted. But those waivers are key. We don't want to see any issues or erroneous appointments because the lack of waiver has happened. So talk if you're looking at that and you are one of those that will be beyond the maximum entry age. Make sure you're working with your soon-to-be supervisor and staffing person to make sure that that waiver is received. So your mandatory retirement date, again, most SRC employees are very familiar with this. So maximum age for firefighter and Leos are age 57, but you need 20 years to receive the enhanced annuity. So there is a clause if you're a firefighter or law enforcement officer and you do not have the required 20 years at that MRD, you are entitled to work until the last day of the month in which you achieve the 20 years. So keep that in mind. The maximum age for ATC is age 56. So that is a different requirement. Next slide. So creditable civilian service. This is service that is subject to FERS retirement deductions. Eligible military service in which a military service deposit was paid in full is also considered creditable civilian service. Eligible civilian service in which a civilian service deposit was paid in full is also creditable service. Please be aware, unused sick leave counts towards your annuity computation and may add to years of creditable service once your eligibility is achieved. So your sick leave can never be used to achieve your basic retirement eligibility. So it can only add to it. So just, be mindful of that. It can never get you to eligibility, but it will add to whatever you have once you are eligible. Next slide. Okay, so civilian service deposits, we don't see a lot of those in these roles. In most cases, temporary and non-deduction service performed on or after January 1st, 1989 is not eligible for a deposit, which is why we don't see a lot of these. Some service performed before 1989 where an employee's pay was not subject to retirement deductions and a civilian service deposit was paid in full might become creditable. The paid deposit does count towards eligibility and annuity. If it's unpaid, it does not count at all. And again, that's in some cases. So if you are one of those that have service that was performed before 1989 and you're wondering if it's eligible or not, again, call the benefits line. We'll let them know you have questions and you'll be assigned a counselor to review that with you. Next slide. Civilian service redeposits. Okay, so you might be eligible to make a redeposit on your FERS deduction refunds that were covered by FERS on or after October 28th, 2009. So in some cases, you may have service that you separated and you took a refund on your FERS contributions. As long as it falls within these regulations, you can make a redeposit on that. Be mindful that interest is charged. The redeposit applications are reviewed and processed by OPM, and paid in full deposits do count towards your eligibility and annuity computation. Unpaid deposits are counted towards eligibility, but not annuity. So even if you did take that refund and you don't pay that redeposit, you still count that time towards your eligibility, but you will not receive it for calculation on your annuity computation. Next slide. So creditable military service, generally creditable active service performed under honorable conditions and prior to retirement from civilian service is what we're referring to when we talk about creditable military service. Sometimes it can seem like a mouthful, and we know that there are lots of stipulations, and this, gets into the weeds as far as deposits go. But generally speaking, your creditable service or your service is creditable if it's active service performed under honorable conditions and prior to retirement from civilian service. So this is generally going to be service performed on or after January 1st, 1957, and it is only creditable if a deposit is made. The deposit must be made on creditable service to have it count towards your retirement. Deposit must be paid in full prior to retirement. So when it comes to military service deposits, that has to be paid prior to retirement. Otherwise, you will lose that opportunity. So creditable military service, just like we talked about on one of the other slides, cannot be used to achieve your retirement eligibility. It only enhances your current creditable civilian service. So, if you need 5 years to become vested in a FERS retirement and you have 4 years of active duty time that's eligible for buyback, you can't be 1 year into your civilian service, buy back the 4 years of active duty time and meet your 5-year vesting time. It doesn't work like that. You can work on buying those 4 years back when you're first brought on, and then when you hit your 5-year vesting, you now magically then have 9 years of service. So again, you can't use it to reach your eligibility. It's just going to add to when you become eligible. Next slide. Okay, so military service deposits, unlike the civilian deposits that are reviewed and handled by OPM, your military service deposit application is reviewed and processed by DFAS. So what you would want to do is you would send in a completed RI 2097 and a copy of your DD 214 to a payroll office such as DFAS. You would get the estimated earnings from DFAS. So on average, the turnaround time is usually about 30 to 60 business days. So we do tell people, keep in mind that's business days. So, you see 30 to 60, but that really may become, 45 to, 70, ish days. Always make sure with your DD-214 that you're looking for a member 2 or a member 4 copy, especially because those are the ones that are going to list the characterization. I've not seen it recently here, but some of the other agencies I have worked for, people would submit the member 1 because maybe they didn't have the member 2 or member 4. The member 1 doesn't have the characterization, so it's not going to be accepted. If a DD-214 is not issued, you can go back to your unit and request a statement of service. So sometimes that will be accepted. Once you have those estimated earnings, you're going to send CBC a copy of those earnings. Keep one for yourself, please. Never ever forget that. Don't send in your original copy of your estimated earnings and not keep a copy for yourself. So you're going to submit the estimated earnings, a completed form of the SF 3108 and SF 3108A, and again, a copy of the DD-214, or if no DD-214 was issued, then a statement of service. The average turnaround time for the deposit process is about 120 business days. Sometimes it can be less. Sometimes, depending on the situation, it can be a little more. So the biggest thing we encourage is you don't wait until you're close to retirement. If you know you're ready to retire in about a year, or you know you're about a year or two away from your MRD and you're going to be, forced out, don't wait until you're going through the retirement process to work on these deposits. You want to work on those sooner. Number 1, because interest will be lower. Number 2, because again, we never know what kind of roadblocks we're going to hit. And it's better that you start it sooner and it finish earlier than what we anticipated versus you're waiting till the retirement process and then for some reason it's held up and it's taking twice as long. So because again, the military service deposits have to be paid in full prior to retirement. There is no exception to that. So it's very important to work on those. Okay, so next we're going to talk about SRC retirement eligibility. I am actually going to turn it over to Lakeisha for a little while. So she will be walking you through some other things as well as some benefits, and then I'll jump back in at the end. So Lakeisha, I will turn it over to you.
All right. Thank you, Vanessa. So let's discuss SRC retirement eligibility. So in order for you to meet your eligibility to retire, you first must meet the age and years of credible SRC service to become eligible. So if you're a firefighter or a law enforcement officer, you can meet eligibility by being age 57 with at least 20 years of creditable service, and that's SRC service. Or you can be 50 years old with at least 20 years of SRC service, or you can be any age with 25 years. Okay. If you're an ATC, you got to be 56 and then have at least 20 years of service or at any age with at least 25 years. So this is very unique to SRC employees. And you also must separate from a position covered by retirement deductions. So as far as if you completed 20 years of service and of SRC service and you're 50 years old, that position that you're retiring from must be one that's covered by retirement deductions. Not necessarily does it have to be a special retirement, but it does need to be covered. So you do need to be in FERS and not, like retiring under FICA only position. Next slide, please. Disability retirement, I'm just going to go over this just a little bit. You do need to, I highly recommend if you're considering disability retirement to please call the benefits line. This just kind of touches base just to give you a little bit of information that this is available. But in order to meet basic eligibility, you have to have a minimum of 18 months of creditable civilian service. You must be disabled from your current position and have a condition which is expected to continue more than 1 year. So that's, something you want to consider. Think about your current position that you're performing, and then your disabling condition. If it's something that is expected to last longer than a year, and that your medical provider will be able to provide supporting documentation to support that. Now, if it's due to an on-the-job injury and you're eligible or you are receiving OWCP benefits, you cannot get both OWCP and disability retirement at the same time. You can apply for disability retirement, and once, if you're on OWCP, and once you're approved for disability retirement, the Office of Personnel Management will provide you an option, and you'll have the option to make a decision as to which one of those benefits you want to continue on. So the next bullet here says that an approved disability retirement can be held in abeyance for future draw if you're already receiving workers' compensation at the time of approval. So if you find that, OWCP benefits is going to meet your financial need at this time more, and you want to choose to continue to be on OWCP, you can do so, and that approved disability retirement will just sit and wait until you come off of OWCP. Then you can let the Office of Personnel Management know that you would like to then draw your disability retirement. All right, next slide, please. So health insurance benefits, or FEHB. In order to continue coverage into retirement, you first must be enrolled in FEHB at the time of retirement. You want to be covered by the FEHB plan for at least 5 years immediately preceding retirement, or since the earliest opportunity to enroll. So most folks who are getting ready to retire, and they're going to carry their FEHB, have had that plan, for quite some time, or if they had it for the 5 years, they, are going to meet that eligibility to continue. However, there's some individuals who separated from federal service, and then they return, and they say they worked for 4 years, and then they're deciding to then retire. All of their service years prior to when they retired, if it was creditable service, that period of time allows them to retire and then they want to keep their FEHB. They haven't had the FEHB for 5 years, but the earliest opportunity to enroll would be the case where they enrolled as soon as they came back on as a federal employee from separation. So when they came back and as a rehire, they enrolled in FEHB, and they've had it for that 4 years. And then they had it, prior to. So that's one of the situations where it would be the earliest opportunity to enroll. So you want to think about that if that applies to you. It does not have to be the same FEHB plans, and TRICARE or Tempest does count toward the 5 years as long as you're enrolled in FEHB and at least one FEHB premium has been paid at the time of retirement. So typically, if someone is going to their own TRICARE and they know they want to take FEHB into retirement, well, open season, you can enroll. However, when you enroll during open season, the premiums don't really go into effect until that first pay period in the new year. So if you're trying to retire at the end of the year, you haven't made the first premium payment yet to be able to then take the FEHB, even though you have the 5 years of TRICARE. So you have to make sure if that's something that you're wanting to do and this applies to you, that you're giving yourself the opportunity to enroll. I mean, unless you have a qualifying life event to where it allows you to enroll in FEHB, you do have to wait to that open season, and then you do have to make at least one premium payment before you can retire and take that FEHB into retirement. Okay, and a change to coverage can be done if it's open season, as I mentioned, or at retirement if you're moving from a self and family to a self-only plan. Retirement is not a qualifying life event, even though, you know, it is a life-changing event. But for FEHB purposes, it's not a qualifying life event. So the only thing that you can do outside of the open enrollment season is move from a self and family to a self-only plan. Next slide, please. All right, so FEHB continuing still. Now, if you're going to retire at the end of the year, you need to complete a paper, and you want to make an FEHB change during the open season, you need to submit a hard copy SF 2809. Please do not submit your election in GRB, because if you make the election in GRB, that does not go into effect until the next year, and you will not be on the rolls the next year. So you want to make sure you submit that paper 2809 for your open season election, so that it can be submitted with your retirement application. That way OPM, once they receive the retirement application, they know that you're making a change for the open season. Now, the cost in retirement is the same as an active employee. However, it comes out on a monthly basis. Your annuity is paid on a monthly basis, so your benefit premiums are going to come out on a monthly basis. So that's going to be the difference in how you see those payments come out. Canceling FEHB enrollment is permanent. So if you're thinking, I'm just going to cancel my FEHB, just know that that's a permanent election. You can never get it back. You will never be able to re-enroll unless of a dual enrollment, a dual federal enrollment. So maybe your spouse has excuse me, FEHB, and you're on your spouse's benefit plan. Now, a retiree can suspend FEHB enrollment if you are going to enroll in Medicare Advantage or TRICARE. So that's something to consider. If you have Medicare Advantage, or if you have TRICARE and you're thinking you want to see how that's going to work out for you in retirement, and you maybe want to have that FEHB sitting back as a possibility, you can choose to suspend your FEHB enrollment. However, there is a form that your retirement specialist will provide to you, and then you would submit that with your proof of your Medicare Advantage or TRICARE, and that will also go with your retirement package. So if that's something you want to consider, make sure you discuss with your retirement specialist. Next slide, please. All right, so this is important. So if your spouse, if you want your spouse to be able to continue FEHB in the event of your passing, you must have elected to provide a survivor annuity for your spouse, even if it's a reduced survivor annuity. And the retiree must have been enrolled in a self and family FEHB plan at the time of death. Okay. If you're enrolled in a self plus one, the only designee will be eligible. So if that's not your spouse, then that would not be the person that would be eligible. If your retiree was enrolled in self-only, no one is eligible to pick up the FEHB. So, you really want to consider that when you're thinking about retiring, if you want your spouse to be able to continue FEHB. Even the partial, you can elect to have a full. We'll go into that later, but you want to keep in mind that if that spouse is going to have FEHB, if something happens to you, you have to also leave them a survivor annuity. All right, next slide, please. All right, so in order to continue coverage of life insurance into retirement, you do have to be enrolled in FEGLI at the time of retirement. You're retiring on an immediate annuity, and that 5-year precedent is also applies here as it does with FEHB. So either 5 years immediately preceding retirement, or you enrolled in the FEGLI benefit at your earliest opportunity when you came on board or as a rehire. It applies to optional coverages as well as basic. So that goes for if you came on board and you enrolled in basic, and then maybe 2 years ago you had a qualifying life event that allowed you to carry option or make an election. So you added option C. That is your earliest opportunity. But if you say you came on board and you just wanted to elect option basic and option A. And then when there was an open season for FEGLI, you made a change. At this point, it would apply because there has not been any open season changes for FEGLI since 5 years. So for the most part, you have to have that 5 years. And your earliest opportunity to enroll, that would really be determined by your retirement specialist after they've been able to review the record. And you do not convert to an individual policy. So in order to keep it, all of these rules must apply. You can keep the coverage at the same as what you have, or you can have it reduced at the time of retirement, but you cannot increase it. Okay, there's no open season change. There's no open season right now for FEGLI, so you can't increase any benefits, any FEGLI benefits at this time. You will need to complete the SF 2818 in order to elect what options you want to keep, reduce, or cancel in retirement. The 2818 form is very important. Next slide, please. All right, so per the BAL 22203, dated March 14, 2022, OPM no longer requires the original wet signature on FEGLI forms. You can sign via CAC-enabled signature. And CAC is when you have to, enable a signature when you're signing for your on your forms in Adobe. It is not the PDF like script that you can just type your name. That's not what a CAC-enabled signature is. So if you're not sure, give us a call at the benefits line and we can make sure you have that clarity. The cost is based on elected coverage and it's on a monthly basis. The basic insurance amount, or BIA, is the retiree's final annual basic pay rounded up to the next $1,000 plus $2,000. So for example, if your annual salary is $97,500, your BIA is going to be rounded to the next 1,000, so that's 98,000, and then you're going to add 2,000, which will give you the $100,000 for a basic insurance amount. Next slide, please. All right, so BIA options at the time of retirement, and this is for your basic, is 75% reduction, 50% reduction, or no reduction. So with the 75% reduction, it's a standard reduction. The premiums stop once you reach age 65. The value of the coverage begins to reduce when you turn 65 by 2% each month until it reaches 25% value. So that $100,000 example that we gave for the BIA, it will eventually become $25,000. Okay, that 2% is going to decrease over each month until it gets to that 25,000. A 50% reduction, the premium continues at age 65, so you're going to continue to pay a premium. It's not going to be the same, but there will be a cost involved, and the value of the coverage begins to reduce at age 65 by 1% each month until it reaches 50% value. So that $100,000 decreases over a period of time until it reaches that $50,000, half of the initial amount. No reduction, that $100,000 stays the same. It never reduces. There is a premium and it continues at age 65. So that's obviously, the 75% reduction has no premium at age 65. 50% reduction has a premium cost, and then no reduction has a premium. Next slide, please. Option A. Option A is that $10,000 additional coverage. Now, at the time of retirement, you must elect to retain or cancel the coverage. So it's basically you want it or you don't want it. You cannot elect to retain higher or full value. The value begins to reduce when you turn 65. So 65 is that magic number when you start, when your the life insurance starts to, have some changes. By 2%. So the value begins to reduce at age 65 by 2% each month until the value of the coverage reaches $2,500. Cost is based on age group until 65, at which time the premium stops. So at 65, there's no premium cost for it, but it will continue to reduce until it gets down to that $2,500. Next slide. Option B, that's going to be the value at the time of retirement is 1 to 5 multiples of your final annual basic salary. You must elect whether you want to retain this coverage and the amount of coverage after age 65. So you have to elect, if you have option B, you're going to have to elect whether you want to keep it. If you do want to keep it, you're going to have to say what type of multiples you want, what number of multiples, and what type of reduction. So there's a full reduction and there's a no reduction. Full reduction is going to be the value of the coverage. It begins to reduce at age 65 by 2% each month for 50 months. The no reduction, the value of the coverage does not reduce. It will remain the same. Cost is based on your age, the age group, so the cost can vary, but the full reduction means that it reduces fully until it gets to a zero balance. So, and it's about 50 months for that. Next slide, please. Option C. Option C is the family coverage. This is the coverage that pays out to you in the case of the passing of one of your covered family members, like your spouse or your children. So the value at the time of retirement is $5,000 for a spouse and $2,500 for each eligible child per multiple of coverage. So you can have up to 5 multiples. So if you have option C with 5 multiples, you have coverage of $25,000 for your spouse or each eligible child. You must elect whether to retain this coverage and the amount of coverage after age 65. Again, this is like option B. There's a full reduction or a no reduction. So the full reduction, the value begins to reduce at age 65 by 2% each month for 50 months. The no reduction means the value of the coverage will never reduce. So if you wanted to keep that option C with 5 multiples for your spouse, and you want to keep that 25,000, the no reduction will remain at 25,000. A full reduction option for 50 months, it's going to reduce until it reaches 0. All right, cost is based on age group. Next slide, please. So the life insurance, in the case of, the retiree passing, the order of benefits payments. Okay, if ownership of life insurance is assigned, benefits will pay first to the beneficiary designated by your assignee. Second, to the assignee if there's no beneficiary. If ownership is not assigned and there is a valid court order on file, benefits will pay in accordance with the court order. All right, next slide, please. If ownership is not assigned and there's no valid court order in file, benefits will pay first to the beneficiaries you designated. So if you have a beneficiary form on file, that trumps anything. Second, if there's no beneficiary form on file, your widow or widower will receive, will become the beneficiary. If there's no widow, no widower, then your children, with the third is none of the above, to your children or children with the share of any deceased child distributed among descendants of that child. Fourth, if none of the above, no spouse, no children, your parents will become equal shares, or the entire amount to your surviving parent. Fifth, if none of the above exists, to the executor or administrator of your estate. And then sixth, if none of the above, to your other next of kin as determined under the laws of the state where you live. So if none of that applies, then, your fourth, fifth cousin, and the court is, you're going to look at the laws for each state. But if you don't want to have your family's burden with that decision, or not even a decision, but having that issue, you certainly want to make sure you complete a beneficiary form for your FEGLI and your FERS beneficiary forms to keep that on file. Next slide, please. And also, just to jump back one, with the beneficiary form, it's very important to review your record, because that beneficiary form that you filled out when you first started your federal employment, it may have been a friend, may have been an ex, may have been a spouse that you're no longer married to. You want to make sure that the form is good. So if you're not sure, complete a new form and submit it to the benefits center so that it can get updated. We cannot tell you who your beneficiary is on file for you. If you call the benefits line, we cannot give you that information. If you're not sure, complete a new form and mail it in to us. Okay, we don't want you to have a situation where somebody's going to get a benefit that you didn't want to have that go to. So keep that in mind. because it does happen, unfortunately. All right, so benefits. Federal dental and vision insurance. You do, if you want to keep that, you can. Long-term care coverage. I know that there's some current ongoing changes happening. I know we saw some information come out on that. Just if you have any questions, just give LTC Feds a call. If you have it, then you will be able to just continue it. Now, as an annuitant, you are not eligible to participate in FSA or premium conversion. So FEHB premium conversion is that pre-tax benefit that you have where your FEHB premiums come out on a pre-tax basis. That is not an option as a retiree. Okay, and a flexible spending account is also not an option. Next slide. All right, so for TSP, FERS employees may contribute to both Roth and traditional TSP. Roth is when the taxes are deducted while contributing as an employee, which means taxes are not deducted when withdrawals begin in retirement. A traditional taxes are not deducted while contributing as an employee, which means taxes are deducted when withdrawals begin in retirement. So the Roth, the taxes are coming out, on the front end. So when it's coming out of your paycheck, that Roth, those funds going into that Roth account are already taxed. The traditional, those are not taxed. So when you go to withdraw it, it's going to start, you're going to be taxed on that amount when you're taking it out. Retirees are not eligible to continue contributing to TSP in retirement, regardless of age at time of retirement. So retirees, once you retired, TSP contributions, that comes to an end. Next slide, please. All right, so TSP Public Law 114, Act 26, Defending Public Safety Employees Retirement Act. It was signed by the President of the United States on June 29, 2015. It amends an IRS code to allow specified SRC employees who separate from federal service during or after the year they turn age 50 to make a withdrawal from their TSP and without incurring the 10% early withdrawal penalty. Great news. So a P code is sent to DFAS and TSP, which notifies them of eligibility for early withdrawal without penalty. So that is going to be something that is sent by your retirement specialist to DFAS so that they will then notify TSP that you should not be incurring the 10% early withdrawal penalty. Next slide, please. All right, beneficiary forms to complete. So the SF 1152, that's unpaid compensation. If anything happens to you, your annual leave payout or any awards or anything that's still pending to be paid to you, that 1152 designates who that benefit or that money will go to. The SF 2823 is the life insurance beneficiary form. So, like I said, if anyone's on there that you don't recall or you don't know, submit a new form. The 3102 is the FERS beneficiary form. So any contributions that you made to the retirement system, those benefits. If you have a child or maybe you have, someone who you adopted, you want to designate those funds too. If you're not married, you want those funds to go to someone, those contributions that they haven't already paid out through your retirement. So That 3102 is for the FERS benefits. TSP3, that's your TSP plan beneficiary form. Now, the TSP3 form is completed and submitted directly through TSP. All other beneficiary forms are submitted to CBC for certification. Beneficiary forms can be found at opm.gov and tsp.gov. So when you get that beneficiary form, you want to make sure that you mail that form into us and make sure we get it. Because if it's not certified by the Civilian Benefit Center, then it's not valid. So you want to make sure if you're completing some new beneficiary forms that they get to where they need to go and they are certified. Okay, next slide. Survivor annuity. So an employee may elect to receive an annuity only during their lifetime with no survivor annuity, and the annuity is not reduced. Or you can allow a 50% survivor benefit to a spouse, and your annuity is reduced by 10% for this option. Or you can allow a 25% survivor benefit to a spouse. The annuity is going to be reduced by 5% for this option. So this is where it's important if you want your surviving spouse to have FEHB benefits in the case of your passing. If that's the case and you want them to have FEHB option, you do have to at least allow either a 50% or 25% survivor benefit to the spouse in order for them to be able to continue FEHB. And of course, they also must be on your FEHB plan. So you want to make sure that you consider that. And for example, if you're, just for easy number's sake, if you're allowing a 50% survivor benefit to the spouse, and your annuity is $1,000, your spouse would get $500. It will cost you $100 in order to provide that benefit. If it's 25%, you say you want to just do the 25% because that's the minimum that you have to do in order for your spouse to be able to carry or continue FEHB if you should pass, then that instead of getting $500, the spouse will get 25% of your annuity, which is $250 each month. And then your annuity payments are going to just be reduced by 5% for that option. So that's one thing you want to definitely consider. So if you're married, if the employee is married and elects to only receive an annuity during their lifetime, the spouse must agree to it by completing and having notarized the SF 3107-2. That is the spouse survivor annuity consent form. So you want to make sure that you discuss with your spouse, and your spouse has to agree. So when you complete that SF 3107-2, you're going to go to a notary and they're going to certify it. It has to be, the important thing about this form is it has to be signed and dated by the spouse and the notary on the same date. The dates must match. Can't be any errors or anything like that on the form, or else it would not be valid. Next slide, please. All right. So the high three for your annuity computation, the high three average salary is based on a consecutive 3-year period of credible civilian service. Typically, that consecutive 3-year period will happen at the end of the employee's career. However, sometimes it doesn't happen that way. Sometimes it does happen, you know, in the middle of their career. So when your retirement specialist is reviewing your record, they're going to look for that information. The basic pay includes locality pay and premium pay for firefighters and LEOs. It does not include any bonuses, any allowances, or overtime pay. Okay. Next slide, please. All right, so here's an example of an annuity computation. So an LEO and ATC with a standard work schedule, the 3-year period for their high three started July 4th of 2007, and it ended July 3rd, excuse me, July 3rd, 2010. So that annual salary that they earned from July 4th, 2007 to July 5th of 2008, that's how much they were getting paid annually. But during this period of time, that's July, maybe like 6 months, they only earned $28,000 during that period of time. They had a pay increase January 6, 2008, and then they didn't have the next pay increase until January 4th, 2009. So they essentially earned their annual salary of $58,551 because it's almost a complete year. So that earned amount is almost that full $58,551 because it went from that whole period is about a year short of 3 days. January 4th, 2009 to July 3rd, 2010 is when this person, it looks like this is their high three period. So I don't know what the retirement date would be, but this July 4th, 2009 to July 3rd, 2010, their annual salary at the time, when they got that pay increase on January the 4th, this $93,000 is what they earned from January the 4th until July 3rd, 2010. So it's a little over a year, of a period of time before a pay change occurred. So you add all these up, you add the earned amounts up, and you divide that by 3, and you get a high three average salary of $60,120. Now, the firefighter with the 72 work hours schedule, here is an example of that situation with the same periods of service for the high three period, rather. All right. So the basic salary in this example is divided by 2,756 hours, and it's multiplied by 144 hours by 26 pay periods. Okay. Next slide, please. Annuity computation for disability retirement. Now, if you're approved for a disability retirement, an SRC covered employee does not need 20 years of SRC service to obtain an enhanced annuity. The employee is entitled to a greater of the earned annuity under enhanced annuity formula 1.7% times 20 years, or 60% of the high three minus 100% of Social Security benefit for the first 12 months. So, and then with the Social Security benefit being reduced by 100%, that part is really going to be discussed in detail with you if this applies to you and you're applying for disability or retirement. Your specialist is going to go over this computation in greater detail. But just generally speaking, the 100% of Social Security benefits for first 12 months, if you're approved for disability retirement and you get Social Security benefits as well, that first 12 months that you're receiving a disability retirement, it's going to be reduced by 100% of whatever you're receiving from Social Security. So you'll always receive the full amount of Social Security benefit, but that first year of receiving your Disability retirement from the Office of Personnel Management, that first year, whatever you get from Social Security is going to be reduced. Okay. And then there will also be a recomputation of your benefits at age 62 to amount that it represents if you continued working and then retired under a non-disability retirement. So at age 62, that annuity is then recomputed as if you never stopped working and you're just now retiring under an optional type of a retirement, a voluntary retirement rather. Okay, next slide, please. All right, so annuity withholdings. So there's some things that are going to be coming out of your annuity. The survivor benefit, if you elect to have a survivor annuity, that 10% or that 5%, depending on which option you chose, is going to be withheld from your annuity. Taxes, federal taxes are automatically withheld. State taxes are not automatically withheld. However, you can request OPM to withhold them. So after you retire, you'll then reach out to OPM to have them to start withholding from your state. So that's something that you will do after you retire. Any benefits such as FEHB, FEDVIP, or even long-term care premiums, those are going to be withheld from your annuity, and any optional deductions will be withheld. So those are the type of withholdings that do come out of your annuity directly. Okay, next slide, please. And the retirement process. So we do ask that you begin the retirement process at least 120 days before the date of your retirement. And that just involves you completing and submitting a retirement package. You can log into GRB and you can complete the forms as well as upload all of the supporting documents. You can do that all through GRB. We will get the application and the supporting documents, and once we receive them, we will assign it to a specialist. Or you can call or email the benefits line, and they will put you in contact with a specialist if you require any assistance. You want to submit that completed retirement package to the Civilian Benefits Center, CBC, by mail or via the GRB portal. Okay. Next slide. The retirement process, again, when you're mailing that retirement package, you want to mail it to the Civilian Benefits mailing address. And if you want to take note of the address, it's the Department of Navy. You're going to mail it to the OCHR Norfolk Operations Center at the Norfolk Naval Shipyard, Building 17. You can write attention to the Civilian Benefits Center in Portsmouth, Virginia, 23709. You can submit the forms with a wet signature or a CAC signature. But GRB now allows you to CAC sign directly in GRB by opening the form in GRB, signing it, and closing and saving it directly in GRB. So that's very convenient for employees because you can submit everything right through the GRB platform. Next slide. All right, so as far as disability retirement, the Office of Personnel Management reviews and adjudicates disability applications. So when you send in a disability retirement application, we need the SF 3112 form, all of the forms, which is the 3112A, 3112B, 3112C, and 3112D. You will need to have medical documentation and a copy of the application that you applied for Social Security, or proof that you were eligible to apply. Sometimes they'll just get something when an employee who's actively employed applies for Social Security, they're automatically given like a denial because they're actively employed. So you can submit that proof along with an optional retirement application as well, because that is also required. So anything that you do need to submit for an optional retirement, you will also need to submit for a disability in addition to the disability forms. So, but we will handle, once we get the package, a completed package, we will review it, make sure it's complete. We will submit it to OPM, and OPM will then make a decision as to whether or not you're approved or not. Next slide. As far as disability retirement, again, an employee who separates from federal employment and then applies for disability retirement directly with OPM, but a complete application must be received by OPM no more than 12 months from the date of separation. If an employee separates, they have up to a year to apply for disability retirement. In some cases, you may not be eligible to re-enroll in FEHB due to separation prior to applying and having an adjudicated approval. So you want to keep that in mind when you are applying for disability retirement. Again, I can't stress enough that please, if you're considering disability retirement, contact the benefits line so they can put you in contact with a specialist to kind of go over the process and what you can expect and what's needed, just so you can have a clear understanding. Next slide, please. So who do you call with questions? We've said it throughout this brief here. You want to call the benefits line to speak with a customer service representative. You can call the 888-320-2917 number, or email us at navybenefits@us.navy.mil. You want to make sure that you reach out to us if you have any questions. Please don't assume anything, or, a lot of times information is lost in translation when you're talking with, fellow coworkers who may have experienced different things. Please know that your retirement is unique to you. So any of your work experience, everyone has a unique experience. So please make sure you call the benefits line Monday through Friday, except federal holidays. You can call us so that you can get information that pertains directly to you. Okay. Next slide. Here's some resources and references. The benefits portal is super, super helpful. I highly, highly, highly encourage employees to go to the benefits portal. There's lots of information. You can find this presentation there as well. The GRB platform, there's a link there. The GRB platform is where you can go and you can do lots of things. You can generate an annuity computation for yourself, so you can kind of see what you can expect, well, to some extent. Office of Personnel Management, www.opm.gov. That's a good website for resources and information as well. And tsp.gov. If you have any questions regarding TSP, I encourage you to contact TSP. They're very helpful, and they can give you information directly that pertains to your TSP account. Next slide. Also the CSRS FERS handbook, chapters 46, 54, 61, and 70. These are some resources that pertain to what we discussed. Code of Federal Regulation, the CFR. In the United States Code 5 USC 8401. So I don't want to read all this to you, but this is some of the resources and references that we use to develop this presentation for you. Next slide. All right, lastly, do we have any questions? I know we have some folks monitoring our chat. Are there any questions out here?
Hey, Lakeisha, I will jump in right now real quick and just let everybody know we are going to keep the chat open for 5 minutes, just in case there's anybody that thinks of any questions. We don't want to, keep everybody hanging on. So we'll leave the chat open for about 5 minutes. Please, by all means, if you have a question, drop it in. We do have the 2 people monitoring the chat box for us. But I would like to thank you to Lakeisha for helping present and carrying a majority of the presentation. Thank you to everybody that has attended. Please, by all means, feel free to look me up in Global and send me, any feedback on the presentation. If there's information out there for you as an SRC employee that you feel like you're not getting any assistance with, or you feel like there's not a lot available, put more of in a simple format. If there was something that you wish there would have been more of during this particular presentation, don't hesitate to look me up in Global and send me an email. I'm always open for feedback. I'm pretty transparent with everybody and say, I make the changes where I can. Sometimes it's something, we don't have any control over, but as far as a presentation goes, we want to make sure we're offering as many, bits of information and resources that we can to all of you to help you better through your career and help you better prepare for that retirement, as a SRC provision employee. So always open for the feedback. If you have it, just look me up in Global and send me an email. So at this time, I think we are done presenting. So again, we'll leave the chats open for about 5 minutes and then we'll close down. If you do have anything beyond that, please feel free to email the benefits line and they will set you up with a counselor on our team. So thank you so much.
All right, thank you.